Welcome, everybody. April 24th, the market update desk with Scott Riley, NMLS number 157524. The great news of the day, it's going to be the first 80-degree day in West Michigan since October of last year. So, hallelujah, spring might finally be here, and maybe we'll get away from the cold weather, snow, and icky weather that's been dragging on far too long. So let's go. What's hitting the news late yesterday and today. Stocks and bonds are both starting the day higher this morning. The latest economic data that we'll run through is showing more signs of an anemic slash slow economic growth and potential for a recession. The silver lining, though, of a recession, if there is one, is inflation falls historically, and mortgage rates always decline. So the positive side of a recession is lower mortgage rates and lower inflation. So we'll have to see where that goes with the current cycle that we're in. The report today for existing home sales showed that sales fell of existing homes it fell 5.9% in March to an annualized rate of 4.02 million homes. Now, this was significantly worse than the market expected of falling a negative 3%. The previous report in February was also revised higher from 4.2 to 4.4, so it was actually weaker than the actual headline of it. Now, the report likely measures when buyers were looking to shop for homes in the colder months, January, February, and those definitely were times when rates were higher. The homes that we're looking at also were relatively higher in price in this report, which impacted the median home price a bit. Also, we did have fires in California in January and February, which affected the report most likely. Now, our good friend Never Right, Diana Olick, I would say, saw this and just trumpeted it like no tomorrow. Said the drop in pace of sales and increasing inventory is causing a chill effect to home prices. But wait, facts are that the median home price rose 1.7% month over month to 403,700, and year over year it's up 2.7%. So, additionally, another component that Oleg made a big deal about was inventory, which rose 8.1% last month to 1.33 million units. Now, that's up 20% from last year, which sounds like a lot. But if you look at it, inventory levels are still extremely low historically and are at some of the lowest areas in places in the last 26 years, well below pre-pandemic levels of 2015 to 2020. And it's almost 3 million less than the oversupply we saw during the housing bubble. Now, what's interesting with Never Right Diana Olick is she failed to mention that yesterday's new home sales report, which was fantastic, probably balanced out the existing home supply because the lack of existing homes that are on the market, and that's why new homes are selling much more. So when you take the average of those, it really wasn't that bad. But of course, she never wants to talk about that. Now, when you put together the pace of sales in inventory, there's actually a 4-month supply of homes, which is higher than the 3.5% in February, but a very balanced number compared to the historical average of 4.6 months. Homes remained on the market, still fairly low at 36 days on market. That's down from the previous report of 42 days on market in February. 21% of the homes sold at above list price. It's down slightly from the 29% last year. Keep in mind, everything is geographic and local. Here in West Michigan, we're still in a very competitive market for homes and bid above ask price. First-time home buyers made up 32% of transactions. That's up a little bit from 31% in February and unchanged from March. Cash buyers still are accounting nationally for 26% of all the transactions, and investors made up 15%. Durable goods orders the report came in late yesterday, showed a rise of a whopping 9.2% in March, much stronger than the 2% rise expected. Now, this figure really does all additionally show the pull forward effect of people purchasing goods and services before the effects of potential tariffs. Now, when we dig deeper, the headline jump of 9.2% was all due to a 139% rise in non defense aircraft. But when you strip out transportation, the reading was actually 0%, which was weaker than the 0.3% that the market expected. Going, and this exemplifies the slowdown and anemic economic pace that we're on. Now, core durable goods was reported at 1/10, lower than the 2/10 that was expected. We got more Fed commentary today. Cleveland Fed President Beth Hammack spoke on CNBC this morning and made some interesting comments when I watched it. She indicated that the uncertainty of tariffs is weighing on businesses and planning. She said that the Fed does not yet know what the trade policy will do to the economy and thinks that it's good to pause and take time to see what that effect's going to be and ensure that we're not moving in the wrong direction. Initial jobs also came out today, claims. Initial job claims rose 6,000 to 222,000, and continuing claims fell 37,000 to 1.84 million. Now, on a technical aspect of what we're looking at in the market for bonds and treasuries, mortgage-backed security bonds are once again challenging their 100-day moving average. There's a lot of room to the upside until reaching the 25, 50, and 200-day moving average. It appears, at least for now, we never know what's going to happen day to day here, that momentum has swung back to the upside looking at the stochastic chart. Now, that's a positive thing. 10-year Treasury is right at 4.33. And that's an important Fibonacci level and 50-day moving average number. Now, if this level is broken to the downside, the next stop is going to be the 25-day moving average, followed by the 200-day moving average, which could get us down to about 4.23. So looks like we may have some momentum slightly helping us temporarily. We'll have to see what happens here towards the end of the week. The Market Update Desk is your original singular market news source. Stay tuned. We get a lot of updates throughout the day. We try to keep everybody informed, but it's definitely volatile out there. So stay with us and we'll keep you informed. 616-293-2189. Have a great afternoon.